Hey guys, it's Imran back with a crypto options weekly. Let's jump in and see what's been going on in crypto this week. All right, remember, no financial advice here. Everything we do is for education purposes only. All right, so Bitcoin's been holding its ground, but macro uncertainty remains extremely high. We're getting all kinds of headlines coming through every day. Markets are kind of all over the place. We had the biggest squeeze since 2008 last week, which was kind of crazy last Wednesday. But we've got China and the US going back and forth on this tariff war with strong words. We've got potential exemptions and then walk back of exemptions. Just it's all over the shop. Okay, so no one really got a clue what's going on, which just spells more and more uncertainty and probably more and more volatility. Let's jump into the charts. So you can see here, Bitcoin did retest that area down at 75K, bounced off it along with all risk assets last week when that had that big squeeze. And now it's kind of working its way back towards 88.5K. That looks like that's going to coincide with the kind of 200-day moving average. So that could be an area of resistance. If it broke above that, then next stop, obvious stop, is probably somewhere around 95K. Remains to be seen though. I'm not overly confident that it's about to break that level unless it has a good reason to. If we got a China deal, if we've got a trade deal with China, then yes, we're blasting through that level. But it feels like we're not quite there yet, and we might have a bit of a ways to go on that. That they are kind of dropping suggestions that more tariffs are going to be announced in terms of sector-based tariffs, like on pharmaceuticals, semiconductors, things like that. So the market might not be too happy to hear that when that does finally drop. Whether that happens this side of the, excuse me, whether that happens this side of the Easter weekend, who knows? Personally, I'd like to see it come the other side of the Easter weekend, so we have a chance to maybe take off some longs, get back into some long vol positions in various places, put some hedges back on, those sort of things before they drop the next round of tariff nonsense, right? So that's what I'm hopeful of. Whether I get that or not remains to be seen. But in terms of levels, like I said, 88.5K is the resistance. Next one above that's 95. If we were to slip lower, 81K's first support. Below that is that big zone between 72K and 75K is going to be your ultimate support level. If that was to break, then God knows where we're going to the downside. So just be aware of that. ETH did manage to pop just shy of 1700, but really unable to gain any ground against BTC. So the ETH BTC spread is still down at 0.019 near its lows. That supply zone of 1800 that you can see on the chart here, where we had that big red candle, that remains to be tested. So we haven't seen the market recover back to those levels yet. I think there's little point in being long ETH until risk assets have kind of confirmed that the bottom is in. A bit early to say that right now. But if we were to get an ETH specific narrative emerge, then we could potentially see a pop back towards 2000. But that 2000, 2100 area is likely to meet some resistance if we do get there. But that feels like quite a long way away right now. So I wouldn't really bet on that right now on ETH unless we have a good reason to, basically. Realized vol staying elevated, but that is based on those massive swings we got last week. So we've seen implied vols come down, but realized kind of hold the level as it stair steps its way down over time. Front end implies obviously were crushed as the ranges became a bit narrower and markets consolidated. Carry is deeply negative in both assets. So implied vol leading the way down as it tends to when markets stabilize. So we've got negative carry of minus 20 on Bitcoin and minus 35 on ETH. Our OHLC charts that show kind of the candles, the intraday ranges, and how they compare to the implied moves based on implied vol show that apart from those massive swings last week, generally we've kind of respected the implied range here, even though vols have been declining. So that's showing some stability, is returning to the market, but those realized levels of vol still include those big swings, right? And that's the kind of disconnect. So we will see if markets continue to do what they've been doing the last few days, we will see realized vol suddenly drop and those carry levels are going to come back towards neutral. Now, the threat of more tariff announcements, though, and the low risk premium that seems to be in implied vol. I mean, if you think about it, comparing equity vol to crypto vol, crypto vol historically traded like 4 times the amount of S&P vol, for example, right? Now it looks like it's trading more like twice S&P vol, which is nothing, right? Compared to what, so there's definitely some sort of disconnect here between crypto vol markets and regular TradFi vol markets. I don't think there's a lot of risk premium in crypto vol markets right now. So I wouldn't want to be selling a load of gamma here. I think it's dangerous in these markets. I still don't believe these markets have really found a true equilibrium yet. I don't think equities are stable down here, and therefore by association, I don't think crypto is particularly stable down here, even though they managed to be fairly stable this week. You can see here the term structures have somewhat collapsed from very inverted into a bit of a contango on Bitcoin, but we are still slightly inverted in Ethereum. Here you can see the moves about 10 vols lower in front end Bitcoin, about 5 or 6 vols lower in Ethereum. Back end Ethereum catching a 1 vol bid, whilst back end Bitcoin still drifting down by around half a vol point. Here's the time series. You can see we had those big spikes in vol and in put skew earlier last week, and they've dissipated and kind of gone away and gone to kind of zero. So we've seen skew get crunched from puts, get the put premium coming down materially. You can see that here, the curves in terms of term structure of skew flattening quite considerably. Bitcoin was at -4.5, is now sub -2. Ethereum was kind of -10 and is now again sort of -3-ish. So we've seen skew term structures flattening as crypto markets rallied along with risk assets on the tariff pause. Puts with strikes 75 to 78k getting sold, getting dumped in favor of 85k to 100k calls getting bought as spot ripped higher. So people kind of, pivoting, turning on that news flow and saying, okay, we don't need these puts anymore, but we want to pick up some cheap calls to play the squeeze. Front end skew, like I said, is a lot lower, but it is still in put premium, but it's much lower than it was. Back end skew still in call premium. If we go for Bitcoin, for example, if we go out to even sort of June's got a slight call premium in Bitcoin, and then it's call premium all the way out, although it did give a bit of that back end call premium back in the absolute long end. But if you look at Ethereum, you have to go out to September to get into a call skew. And then it does hold that call skew as we go longer down the curve. We've said it all along. As long as the long end skew is staying in call premium, that does suggest we're still in a bull market, bullish regime. So we haven't quite shifted into a bearish regime yet, even though a lot of people are saying we're in a bear market now in equities and you need to sell the rallies and stuff like that. I'm kind of using this long-term skew indicator as my regime indicator to say we look like we're still in a bull market in crypto, particularly in Bitcoin. Hard to say we're in a bull market in Ethereum given the price action. But, the fact that the market is applying that long-term call premium, particularly in Bitcoin from sort of June onwards, until that skew flips into puts across the whole curve, then I'd be skeptical to say that we are in a bear market and the bull run is over. I do still have some faith that the bull run can return once we've digested whatever this tariff trade war policy is going to end up like, and the market can start to look forward. Then we're probably going to see a bit of a rush back into risk, and Bitcoin, given its resilience or relative resilience, will probably be favored as one of the risk assets people really want to own. So that's kind of my thinking right now. And, I would need to see a shift lower in the back end skew all the way into put premium to like kind of say, all right, you know what? It looks like we're done here. And I don't know when the bull market is going to resume, for a while, basically. Okay. So that's kind of what I'm using to kind of guide me at the minute on that in terms of that structural bullish or bearish view. And then if we look at the relative value side, because ETH Bitcoin does still remain very, very depressed, we haven't really seen it able to bounce. It looks like it does need a catalyst of some kind, ETH specific, to bounce. Front end vol spreads are still staying really, really high. 25 vols for ETH over. It is realizing a lot though. Back end vols even moving up as well. So we're grinding higher from about 12, 13 to about 14 in the back end now by about a vol point this week. Skew differentials still price more put skew for ETH throughout the entire curve, but especially in the front, where by about 4 vols, where ETH puts are kind of more favored. I think for that to change, we would need to see some real outperformance out of Ethereum that people could really start to think, okay, there's a reason why Ethereum is going to rally 10-15% more than Bitcoin in short order. Doesn't look like we've got that. ETH's still exhibiting high beta to the downside. So this is going to be the condition of the put skew, I would have thought, from a relative value standpoint. If and when bullish narrative does emerge on Ethereum, then I think bullish risk reversal is going to be the obvious play, because that put skew is going to have a bit of a memory and it's going to be looking rich. So if you've got a good reason to buy ETH, then selling ETH puts and buying ETH calls does offer value, particularly in the short end of the curve where you can really get some leverage and get some gamma to the upside. So I think that's what we will see, but we will need to see a real narrative switch for that to happen, basically. All right, guys, that is it for our quick Crypto Vault update for this week. And we'll catch you guys here, same place, same time next week.
Remember, this is just a little taster of what we do at Options Insight. To get access to all our research, including my in-depth vol market insights, flows and positioning report, and my portfolio trades, and a whole lot more, you can sign up at options-insight.com. I'll see you soon.